All right, now to our next conversation. Well, India's banned exports of wheat effective immediately, citing a risk to food security, partly due to the war in Ukraine and as a scorching heat wave curtailed output and domestic prices. And we've seen prices hit a record high with all of that. We have Dumebi Oluwole, analyst at Financial Derivatives Company, joining us right now. Great to have you on the show, Dumebi.
Thank you very much for having me.
Yeah, so most analysts, they talked about the commodity super cycle. I remember in 2021.
Yes.
I'm sure they didn't see this coming.
No, I mean, no one literally saw a war coming. So, and all of the, increase in prices that we're seeing across the global commodities market is literally stemming from the Russia and Ukraine war. And that's because Russia and Ukraine are really significant to, or are really important to the global commodities market, from energy to grains, even to metals. They are extremely important. And so with what is happening in the warring countries, we're seeing the ripple effect in the global commodities market, and then there's a trickle-down effect to countries that import. So now coming to India, this is somewhat like the same issue that happened with Indonesia, because like a few weeks back, Indonesia also banned its palm oil exports to the global commodities market. Just because domestic prices are higher. It might seem quite ironic because let's look at India now. India is the second largest producer of wheat in the world after China. And imagine a situation where the country is now saying, oh, wheat prices are really high in our country, we can't export anymore.
When you should be making money.
When you should be making money from higher prices. But you can't really blame them because we're seeing that several countries are beginning to take some form of food protectionist approach, and by that I mean a situation where you decide to just not block out imports, or block out exports rather, just so you can satisfy your local demand before now selling to the external world, so to say. Somewhat like what China did in its early days, when they just had to cut off the entire world, said, okay, let's focus on
it's quite a huge sacrifice.
Yes, it's quite a huge sacrifice,
revenue.
but it is. But I mean, in a situation where your economy is literally tanking, inflation is high, there's a risk of people protesting, energy prices are high. So in one way or the other, you would have to sort out some part of the economy, just to at least reduce prices, and that's exactly what India has done. It's the same approach that Indonesia has taken, and like you rightly said at the beginning, the reason why they did that is to, first of all, because production was low, so they couldn't even, they need to first satisfy local demand before you export. And this is just a very simple case of, comparative advantage when you're looking at trade activities. Now, when you want to engage in international trade, you should have been able to produce enough to satisfy you. So you probably you have surplus, and then you say, oh, okay, I can actually sell this, and your cost of producing this commodity is not as expensive, so you're encouraged to now want to sell, to make money off the excess that you have. But not a situation where you're not producing enough to satisfy your own demand, and then you now want to sell. So it's like you're choosing outside at the expense of your economy, and that has other ripple effects in terms of like a public backlash and all of that. So a lot of times governments, when it comes to international trade, they look at commodities that they have comparative advantage, that is the commodity that they could make the most, and they're not spending as much to produce. And then they already have surplus of this commodity, especially when you look at agri-commodities. And that's exactly what India is trying to do now. They can actually satisfy global demand. But right now, domestic prices are really high. Demand is also high, so they have to satisfy demand. It might be quite aggressive, but it's something that is a decision that they had to make in order to cool domestic prices. I remember that it's quite a double whammy when we look at the situation in the wheat space, because China, which is the top exporter, is on lockdown right now, even though some states are beginning to reopen, but production levels are not yet exactly where they used to be, and then selling as well is not exactly where they used to be. The US as well is having some issues with its own supply. US is the fourth largest global exporter of wheat, and then you also look at what's happening in Russia and Ukraine. So that's exactly what's going on, and that's why prices, especially for wheat, will continue to.
And we're already seeing, most North African countries actually feel this impact. So countries like Egypt and Nigeria is feeling some of this too. We're seeing the prices of bread actually soar, at this point. But what is the option? For Nigeria, with this rising price of wheat?
Really, there's very little.
Because I'm hearing talk about cassava here.
There's very little options. I mean, let's start with the fact that before we even go into conversation about cassava, let's start with the fact that the wheat that we import, because we produce wheat, but not the wheat that is used for bread. So that's why we actually have to import, this much. And then with global prices of wheat higher, we're definitely going to see an impact of that in the price of flour. Price of flour is already almost 25,000 naira per bag, 50 kg bag. So we'll see that factor into the cost of production for companies that use flour as a raw material, as an input material. We'll also see that factor into the price of bread. I mean, last year we saw that bakers were already saying they're probably going to shut down operations just because their cost of operations had already increased by almost 20 to 30%. So we would definitely see something like that, and that would fuel inflation. Nigeria spends on an average about like $2 billion on wheat imports alone. So it definitely would have some impact on our import bill, because we're going to be spending a lot more than we're making. Exactly. So, but then when we now look at moving to other options, like other alternatives, preference comes in, preference is extremely high here. Right. How many people would want a bread made from cassava than...
I'd like to try it out, though.
Well, that's you. I don't think I would want to try that. But regardless of that, I think that, when we're not in a situation of war or famine, when people still have options, survival instincts don't really kick in. So bringing in a bread made from cassava rather, people might still want to leave it and then they'll rather buy substandard bread than buy a bread made from cassava. So we could see that. But a situation where survival instincts now kick in and then there's really no option, like there is no bread at all, there's no bread made from wheat flour, then we could probably see some level of demand for it. But the question now is, even if we want to do that, do we have the capacity to even, produce as much bread made from cassava that people can actually buy, or that would meet the local demand for that? So there are a lot of questions around it, and like I said, the most important thing here is people's tastes, people's preference. So the bakers would want to make as much money. So instead of going into the production of cassava bread, we definitely would see an increase in the price of bread, and some people that can accommodate the increase would probably do that to just maintain their demand. And for households, like people might change their eating formula. So if you used to eat bread maybe like 2 or 3 times in a week, you probably eat it once. That loaf of bread that used to last for a week or 2 now would have to last for a lot longer. If the bread is looking a bit stale, you put a frying pan on, put the bread on it, you heat it up, or you put it in the fridge.
Quite interesting times, maybe. Well, let's talk about another, this asset class now. Some have grouped it into a commodity, some have said it's digital gold, talking about Bitcoin. So we see the SEC now has come up with some guidelines on how investors should interact with this asset class. How did the guidelines, what stuck out for you in those guidelines?
I think what really stuck out for me was that, number one, the SEC is doing this at a time when the global price of
the market is in turmoil.
is in the red. It's practically like a bloodbath going on with cryptocurrencies, even stable coins. We're seeing stable coins that should be stable are unstable.
Very unstable.
Very unstable right now. So I think that it's quite, I wouldn't say ironic, I would just say the timing just seems a little funny. But regardless of that, cryptocurrencies are known for their high volatility and no regulatory backing. But with the SEC coming out to do this, and remember that the SEC's guidelines are covering the issuance of cryptocurrencies. They're looking at platforms that exchange this commodity and people who hold it. So this is some form of protection, I would say, for people who hold cryptocurrency assets. The exchanges who run cryptocurrencies would now have to be more accountable with their numbers. Will have to be more accountable to the people that trade with them. So everyone would, especially for the exchanges, would have to tread more carefully now that there's a regulator behind what they're doing. And people, because the truth is, unlike a proper legal tender like the Naira or like the US dollar, cryptocurrency still has some lack of trust to it. People don't really understand the dynamics of cryptocurrencies. As much as you hear, oh, it facilitates cross-border transactions, yes, you could easily change dollar to cryptocurrency and then change it back to Naira, yes, but my dad doesn't know my dad knows what Bitcoin is, but he would rather have his US dollar in his account than have a Bitcoin. Yes, the woman in the village knows what dollar is, even though she probably hasn't seen it before, but she would rather have a dollar than have a non-existent
and dealing digital with blockchain addresses.
Exactly, than having to deal with a digital and say, oh, Mama, I sent you Bitcoin. What's that?
What's that?
She has no idea. So, now that there's a regulator behind it, we could see some level of increase in attention or maybe demand towards crypto assets or digital assets, because now trust could increase. Now that you know that, oh, if I have this money, if anything happens, there is the SEC behind it. But let's not also forget that we're dealing with the Nigerian economy here. The CBN has been very vocal about its skeptic stance. Exactly, about its skeptic stance on cryptocurrencies. So, and that's because they think it's being used, or they are saying that it's being used for illicit, transactions, money laundering, terrorism, and all. So there's still that bubble, or there's still that cloud hovering over the cryptocurrency space in Nigeria. And quite frankly, it's not just in Nigeria. There's so many African countries that are not exactly friendly towards crypto assets. Yes, but with Nigeria doing this, I think that it could put Nigeria in somewhat of a positive light in the digital currency space globally, because this is a very interesting step, and people will definitely want to see how it unfolds. They don't know. No one knows whether the CBN will come and they would consolidate with the SEC, or probably come out and completely, divide itself. So, and we've seen this happen over time. There was a time when it happened with the likes of RiseVest and all that were engaging in US stocks and all. We saw that. But they were backed by the SEC, but the CBN, had a different approach to their transactions, and that had to be, sorted out. So
we need to watch these.
So we just need to watch it. Exactly. We just need to watch
body language.
Exactly. We just need to watch it to see how it all unfolds.
Right. All right, Dumebi Oluwole, analyst, financial derivatives company. It was great having you on the program.
Thank you.
All right, we'll take a moment now.